Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, daily chart, and it's been a wild ride. So we went and broke the December 2018 lows down in the 2319, 2316 area. Did as low as 2262. They bounced it off the close, took it up into the mid 2400s, and then right back to test the limit down at 2275, only to bounce it another 100 and so handles back up to where we're trading now in around 2362. So you've had down here in and around the lows, you have had three consecutive violent 100 to 200 point moves in the course of, basically 12 hours, which, that's substantial. That's substantial. We were in the move off the lows. We really didn't catch any of it after that. I wasn't really fired up to trade last night. We're having a really good week and a really good month. And even though these tapes remain really volatile and you can trade them and do all this stuff, you still have to take a break. Otherwise, you're going to get tired. And you're not going to be performing at your best. So even though we're all holed up in our houses here, I would still suggest getting off the desk, get out of your office, do something else, and come back to it. And I say this especially to my subscribers. Look, we can't do many more handles than we've done. Okay, so right now, as these moves become super violent, a lot of this is going to be about keeping the handles that we have. At least today and tomorrow. We'll get into next week and do what we need to do. But the week is over. The month is over. Year's over. We fill in the blank. It's over. So my expectation for today is a day where it really has an opportunity to battle in this 200 that's kind of expanding into a 300 point range. 2550 is still very significant resistance on the upside. And 2350 had been pretty reliable support, but we've dipped, nearly 100 handles below that on two occasions. So 2350 is no longer reliable support. Could we test that 2260, 2280 area today in the regular session? Sure. Absolutely. Is the news flow probably going to stay pretty damn heavy? Yeah, it is. But there's going to be a point where it gets priced in. I don't know if that's here. I don't know if that's somewhere below. But as you see more intervention, maybe there's a point where it turns the tide. And if it turns the tide, that doesn't mean we're going back to the highs, obviously. The only thing that is going to do is create a more reliable multi-day bounce. That probably heads back somewhere towards the 9-day outside chance at a daily midband, wherever the daily midband might be falling at that particular time. But I wouldn't expect much more of it than that. We're in a bear market. We are in a bear market, and it is what it is. So as we open today, we're down 1.45%. Like I said, it's been up, down, up, down, up, down in huge moves. You've got the hourly midband at 2361. Our proprietary moving average is at 58.75. Volume weighted average price at 70. So, 55 to 70 is going to be key off the open. We open in about a half an hour, and we'll take it from there. All right. Everybody have a fantastic day. We'll have some more stuff on social. Trade them well, and I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.